there, good morning and welcome to Indian Open right here on BloombergQuint. I'm Neeraj Shah, with me is Navneet Saluja, and it promises to be a slightly different start to the day today, simply because quite unlike what happened in trade yesterday, because the world markets were very buoyant and therefore doing well, and therefore we had a bit of a leg up on back of that. The US markets came off completely from the highs of the day yesterday, and Asia Pac in today's session, save for Nikkei, isn't doing all that well. Dow futures are very flat, SGX Nifty is down in the red. So you have the Q stacked up against you. So if you were long yesterday, you don't essentially have the best of start. The only key difference, or the key question, Navneet, to my mind would be whether or not this dip can be bought into, because yes, there were some longs that were created yesterday. And while the coronavirus cases in India don't look to be really coming off, world over, despite New York having a very bad day, Europe is looking slightly better a place than what it was a week ago.
Absolutely, Neeraj. Good morning to you. The curve at least seems to be bending when you look at, the numbers coming out from Europe. Remains to be seen what happens in US. But sticking to markets here, and actually we're in uncertain times. The cues were looking good, but once again, I think global cues this morning are not looking that great. As Neeraj highlighted, US markets came off. Asia as a pocket is trading mixed. SGX Nifty is also trading lower. Yes, but just to take you through the data points, FI is bought into the cash segment over 700 crores, so that was one positive takeaway. And even on the futures and options side, they unwound their short positions, created more of long on both index futures as well as stock futures. And also on the option side, we were getting positive cues. Remains to be seen, as Neeraj highlighted, there is a dip this morning, as SGX Nifty is suggesting, whether that dip gets bought into or not. I think that's the most important point that one should keep in mind. But let's also delve more into lockdown and what's the latest we're getting from there, as group of ministers have said to have advised the Prime Minister to only partially lift the 21-day lockdown. We've got Sudhir Ranjan Sen of Bloomberg News joining us with more details on that. Hi, Sudhir. Good morning. What's the latest plan? What more details are you gathering from there?
Well, what we've been able to pick up is that the recommendations or the understanding that the government has come to, and most likely this will be reflected very soon, is there should be a staggered kind of a lifting of the lockdown. We know for a fact that the government is not in favor of lifting the lockdown on educational institutions. But that said, there is cultivation that needs to be done, the harvesting of the wheat that has to be done. So they will allow harvesting. The government has already allowed movement of goods. So what we're likely to see is most likely, we must underline that, because the decision is ultimately with the Prime Minister and his advisors. But it could be a staggered lifting of the lockdown, where we may see the kind of hotspots that are there kept under lockdown, while the other places that are relatively free of any kind of infection slowly being allowed to get back to normal. Back to you.
All right, Sudhir, thanks a lot for joining us and taking us through all those details. Remains to be seen what happens to this lockdown on April 15, whether it becomes a state-specific issue or once again nationwide, Prime Minister will go ahead and extend this lockdown. But Neeraj, a lot of reports, emerging out of there. And, not to forget, there are a lot of hotspots now emerging even in Maharashtra. We've got 5 cases coming in from Dharavi. And, of course, we've seen totally closed down coming in for certain areas in Worli as well. If they don't, lift the lockdown, economy as it is in a complete shutdown. Certain reports also indicating maybe just every state will take over and the government may leave it up to them, and there could be a partial reopening of the economy.
Yeah, and it's interesting, Navneet, because as much as we would like to know what corporate India is saying, I think what Bajaj Finance said in the call that day about different stages of the lockdown getting lifted and what kind of impact does it have on their business. It's certainly different for different businesses, but it gives you an idea about the kind of economic impact that this lockdown issue would have if it's getting delayed by 15 days to 30 days. And now nobody's out here saying that it is not important. Just the economic impact needs to be analyzed as well. And just before we get in our guest, by the way, the other thing that I think what both me and Navneet are trying to also drive home to is that quite unlike the world, which is, and at least certain pockets in the world wherein we're seeing a bit of a tapering down of the curve, on COVID-19, India is not quite seeing that. We right now in a stage wherein things are actually moving up, and the economic impact may be drastic. I think a couple of brokerages have said that India may grow next to negligible. HSBC said that. Goldman is saying that you might have a recession period in India because the consumption basket is getting corrected. The bit is, don't look at the global charts which are bouncing up 20% and believe that India too should bounce back. There might be a difference between what India does in the near term, Navneet, versus what the world does. The world seems to be in a slightly different place because of the liquidity and access to capital compared to India, and the number of cases in India versus the rest of the world as well.
Absolutely, Neeraj. In fact, the sort of stimulus that is, coming in from developed nations, from US or for that matter, Japan, I think it's very difficult for India to come up with such sort of stimulus. Remains to be seen if going ahead, there are more measures that are, announced from a government side on the fiscal front, or for that matter, even for the monetary side from RBI side. So that remains to be seen. But I think the street going ahead will be focusing on what sort of measures both government and RBI takes. I also want to highlight, Neeraj, one more thing. March as a month is such an important month for India because of year ending. That's the month where we collect majority of our taxes as well towards the end of the financial year. Even when the government sits down and factor in their GST collection, I think the maximum collection they factor in for the month of March. So practically because of the lockdown, that month is not going to give you that sort of revenue as well for the government. So let's see. I think they will be a little more liberal now when it comes to the fiscal deficit and work more towards the social sort of reforms per se for the economy, because a lot of daily wages have been losing their jobs. So let's see what comes up or not. But looking at the markets, Neeraj, yesterday was a really interesting rally, I must say. I think across the board there was buying, and finally I think the banking stocks, they bounced back. Majority of the gains came in. Of course, one was Reliance Industries, which contributed the most, but most importantly you had ICICI Bank, HDFC, all these heavyweights, they bounced back. And remember, as a pack, banks so far were underperforming and they were contributing to the losses.
Yeah, save for maybe a Bandhan or a Piramal. You're right, Navneet. Most things did very well. And therefore, the question to our guests when they join in would be, can banks continue the rally or will it get sold into? But as important is it to try and identify the market trend, it's also important to take one eye on the stocks which are in news today and could react, maybe could react to the news flow around them. So Sumit Sarkar joins in right now with his list of companies that you should be keeping an eye out for today. Sumit, good morning.
Good morning, Neeraj. I'll start off with Aurobindo Pharma, and this is on the back of a PTI news which says that a class action suit has been filed against some drug manufacturers, including Aurobindo Pharma, in the US court for allegedly concealing facts about a cancer-causing agent's presence in metformin medicine, which is typically used for type 2 diabetes. So that is a negative news coming in for Aurobindo Pharma. Along with that, Vartec Vabag will be in focus because they have secured a 5-year operation and maintenance contract in AMS sewage treatment plant in Behran for around 90 crore rupees. So that's a positive news. Deepak Nitrate has received approval to commence production of 2-ethyl nitrate, which is one of the essential raw materials used in refining process of diesel oil. And the company had applied for this license to ensure continued supply to the refinery companies even during the lockdown. Embassy Office Park, because the sponsor Embassy Property Development has created a pledge of nearly 8.13 crore units, that is 10.54% stake in favor of Catalyst Trusteeship for a period of nearly 10 years. This is related to the NCDs that has been taken by this sponsor, and post this pledge shares, a total of 15% of the units have been pledged by this sponsor. Lastly, on the back of Burdale, IndusInd Bank would remain in focus because UBS Principal Capital Asia has acquired nearly 0.9% stake in the bank yesterday.
Okay, so those are a few names that you got to keep an eye out for. Keep in mind, I mean, thanks Sumit for that, of course. Two things that I just want to quickly tell you about the stocks and news. One, Aurobindo Pharma, and I'm talking to Darshan about it, that these lawsuits on some of these pharma companies happen quite often. So it may not be as serious as it may sound, but the stock may well react because this is the time wherein negative news get punished. So do watch out for Aurobindo Pharma. Second, for Deepak Nitrite, this permission to produce this may not be a great revenue changer for the company. It's the company made an application so that the refinery space in India does get the product that is necessary and vital, and therefore from that perspective important. But for Deepak right, the larger piece of news is that DASDA prices have come off, and I think you'll hear from a lot of people about this. Just that the management in the con call has said that DASDA coming off, because some of it is raw materials, may not impact the companies as some of it is a raw material for the other products. DASDA prices coming off may not really impact the company materially. So you've got to keep that at the back of your mind. But like we said, the important thing is to try and figure out what the trend is looking like more so in the Nifty Bank. Is Gaurav Bisa with us? Because then we could actually go to him and try and figure out what to do in a scenario like this. Gaurav, so good having you as always. Thanks so much for joining in. Tell us, Gaurav, the world markets are not particularly gung-ho. We might start off slightly lower. What do you do with the banks? I want to start off with the Nifty Bank first, then we'll move on to the Nifty.
Good morning. First, when we talk about the global markets, yesterday Dow Jones and S&P 500 had formed a bearish harmonic pattern on a 120 minutes chart, 2 hourly charts, and we've seen a reversal happening from a trigger point, the PRZ of around 4%. Yesterday, Nifty first, for the reason that Nifty was also forming similar kind of pattern at around the level of 8850. There was a chance of a bearish cipher sort of being formed over here. Having said that, and similar is the case with Nifty Bank as well, where we have seen a very strong momentum coming in last couple of days. But if you look at the hourly or 2 hourly chart, there's a strong resistance at the area of 19,300, 19,350, and there can be some reversal that can be expected in Nifty Bank as well. If we see maybe P and F, point and figure charts, we don't see hourly charts in there. We see a 1 minute chart. So if we see maybe a 0.25% by 3 box size. If you see that, it had given a very strong breakout. There can be some pullback that one can expect in the Bank Nifty index as well. It can head towards the level of 18,700, 18,750. It would be very interesting to see whether at 18,750, if it sustains, then we can see a resumption of the trend that we saw yesterday, and it can scale new highs. If that is not the case, if it trades below 18,700 on the spot side, then yes, there can be a scenario where we can see a dip towards the level of 18,200, 18,250 in a swift mode. So today it will be crucial. We are likely to open on a gap down note, but are we sustaining the gap down levels? That is the more important level, more important question. If we do, then we can see some amount of recovery towards the second half of trading session. If not, then I think we can see some more pressure going ahead.
Okay, that remains to be seen what happens, because Shakes Nifty suggesting an opening in the morning. In terms of individual stocks, what are you recommending in trade for today?
First one would be on Ramco Cement. That would be a sell call, where we have seen yesterday a lot of these mid-cap names, even large-cap names have enjoyed 10%, maybe more than that of move in a day. It had Ramco Cement was one that saw significant shorts, and we did not see too much of short covering happening yesterday. It was up by, I think, a paltry 1%, 2%, if I'm not wrong. It has given a breakdown. It retested the breakdown levels, and it's still trading below that. So in my opinion, one can keep a stop loss of 505, play for levels of 455, 460 in Ramco Cement. ICICI Prudential is looking interesting. It is yet to give a breakout on point and figure charts, but if it does that, if indeed we see a close above levels of 360 today, then we can expect 10% up move coming in next 5 to 7 trading sessions. For trading per se, one can keep a stop loss of 350, play for targets of 380.
Okay, that's one sell call on Ramco Cement and one buy from Gaurav Bisa, and that's on ICICI Pru. Gaurav, just want to touch upon the banking stocks as well. Of course, you've given your views on Nifty Bank, but a lot of these individual constituents of Nifty Bank and Nifty were up and about. I just want to view on IndusInd Bank with 25% gain seen yesterday, looked like a short covering bounce, but do you think the stock has bottomed out, and at current levels of 390, 391, one can take a relook at it?
Well, it is difficult to say whether it has bottomed out as yet or not, because the only thing that can go in the favor is that the previous swing low that it made towards the level of 250, that has been still sustained. We did not see any attempt to break those levels so far. So that is going to be crucial. But going ahead, I would not call it as, or I would not rather term it as as a bottom out process. It will take still some more time. But yes, if it sustains above level of what I can see is if it sustains above level of around 400 on the spot side, then yes, there can be some more spikes toward level of 440, 450 that can be expected in a day or two. But I would keep it a conditional call. Buy only above levels of 400. Keep a stop loss of 390, 388, and on the upside 440, 450 is what I would be expecting in IndianOpen Bank.
Okay. Chandan Taparia also joins in with his thoughts. Chandan, good having you. Thanks much for joining in. What's your index strategy today, Chandan? We might start off slightly lower. Would you buy? Would you sell? Would you stay put?
Yeah, good morning. First, talking about the Nifty and the couple of database, we have seen the strong recovery in the market. In last trading session has rallied by 9% and Bank Nifty rallied by more than 10-11%. So this movement was led by buying interest in many Hayward's counter, and also the short covering was visible. And after a long time, FIs turned positive with the short covering in index future. So all such sentiment towards supporting the index to move on higher side. And the good part is that wallet index is continuously falling down from last 4 trading session, and it has gone to 50-51 level. And same time, the put call ratio is surged to 1.45 level. So all such database indicates that now some support is being built in the market at lower zone. So I believe that after the decline, if it manages to hold the support of 8500, 8555, then I'll attempt to go with buy side for an up move towards 9000 to 9200 level. And as per the immediate option data, we are getting the trading range in between 8350 to 9000 to 9200 level. So I think the gap down opening can be utilized to play the again bounce back move in the market going forward.
Okay, so you would go long on the Nifty and the Nifty Bank on the gap down open.
Yeah, so more comfortable on the Nifty because of the buying in selective pharma and the FMCG counter, and we'll closely watch the support of 8500 to 8555 to initiate the trading position in the market.
I think that's an important piece to figure as well. Chandan, in light of that, are your stock ideas veering towards pharma and some of the others, or is there a different set of stocks?
Yeah, perfect. If you talk about the strong conviction in such kind of market, then that will be the pharma index and the FMCG counter. But most of these stocks have rallied well, including HUL and Nestle. So if it opens down, then only we can find out the next opportunity for the next leg of rally. So I have selected one buy and one sell in line with the market momentum. So buy trade is buy on Biocon. This stock has seen the built up of long positions and holding its gain and making higher top, higher bottom. In fact, the weekly chart and the daily chart indicates the positive strength. The first trade would be buy on Biocon, and we are here expecting a move to us 345 to 350 and recommending to buy with a stop loss of 308. And second trade, that is sell on LIC Housing Finance. Even after the market recovery, we have seen selling pressure in most of the financial company, including LIC Housing Finance, Bajaj Finance, M&M Finance. And we believe that LIC Housing Finance is having the negative structure and making lower top, lower bottom and respecting to its resistance trend line. So recommending to sell on LIC Housing Finance with a stop loss of 227, and this stock can dip below 200 levels.
Okay. Stay on, gentlemen. So much more to talk about. It's going to be a busy morning, and your opinions between 9 to 9:20 would be very crucial today. Get in Rasmik Oza to talk about the fundamentals as well. Rasmik, so good having you. Thanks much for joining in. What's your sense, Rasmik? Are there pockets wherein the earnings damage or business damage would be limited, and therefore this price correction gives one a chance to buy, or would you wait for some time?
Good morning, Neeraj. I think the Nifty, has been recovering mainly because of the reduction in the cases of COVID seen in Europe and maybe anticipation of peaking out in case of US. So somewhere global markets, bottoming out and recovering could help Indian markets also to recover. I would actually, have a strategy of recommending buy on declines, because this market is actually, it's not a one-way market. Enough opportunities will be available in the market. So it's best to look at, dips whenever markets are in a correcting mode. One should look at adding. As far as I think earnings are going forward in this coming earnings season, we're expecting Nifty earnings to fall by around 16%. Only two pockets could be, showing healthy earnings growth. One could be banks, because the business got impacted only last, a month or so. But otherwise, they've been quite good on, Jan Feb has been very good on both lending and on the deposit side. And pharmaceutical, I think, yes, because of the defensive nature, I think their profitability could be a little better. But I think as you enter the earnings season, I think the start results could be quite decent enough, because normally the results season starts with IT and banking, and I think there you will not see any disappointment. So to that extent, maybe we could have a little higher probability of markets going up than going down immediately. maybe once markets go somewhere between 9 to 10,000, from there probably as the second phase of the result season starts and disappointing numbers come in and people start gauging the impact on FY21, that's the time I think so when you could actually then retrace and slightly start going down. That's the path and trajectory I'm looking at from a 2 to 3 month perspective.
Hi, Rasmik. Good morning to you. You also mentioned about pharma, and last 2 or 3 sessions, we've seen a good bounce coming in for all these pharma companies. And not to forget, last 3 or 4 years have not been that great because of pricing pressure that has been coming in from the US market. And some developments also after government lifting restrictions on export of 12 drugs as API supply will, I guess, now resume. Keeping all these factors in mind, and of course, there is some news flow regarding Aurobindo Pharma. PTI has reported that a class action, suit has been filed for a lot of these companies, and Aurobindo's name featured in that for concealing some facts, which, according to you, can be a good bet within the pharma pack if somebody wants to build a portfolio right now for the next 3 or 4 years.
I think maybe Aurobindo has some shades of grey, where people are a little maybe have some concerns in the management. Otherwise, most of the bigger generic companies, they all look quite attractive in terms of upsides from here also. So as a house, we cover Cipla, Lupin, Sun Pharma, all of them look good at this juncture. I think one definite change which is going to happen going forward is post this COVID, once it settles down, and maybe in the next 2-3 months after this incident subsides, I think globally you will see governments looking to increase their expenditure on healthcare. That's one, A. And the fact that actually, in the next coming winter, again, there will be a threat and a hanging sword of a relapse of this COVID-19. So that could also, again, make governments and, to take proper care in terms of healthcare that time also. So given these two things, I think so the pharmaceutical sector as such could be in a very sweet spot. It may not be a dead cat bounce. It could be a structural, you could see a structural rally in the sector across, and it would be right to say also that probably after 3 years of underperformance, this year you could see the pharma sector outperforming the broader index in a meaningful way. So we are very optimistic in all the bigger generic pharma names because maybe the demand for maybe not across the board but specific medicines could be on the rise, and the fact that they could also get a little bit of benefit on currency also. So these are two things actually which could help the pharma sector outperforming in the next couple of quarters.
Rasmik, would that currency benefit have a positive view on the IT space as well, or you would avoid that pocket?
No, IT, we are not that optimistic actually, because what is happening is, unlike pharmaceutical, demand could be a problem because of this COVID. Most of the companies could be on the back foot in terms of spending on infrastructure, and capex on IT actually maybe to the extent required. Most of the companies have actually employees have been working from home, so that's the only space where probably companies could look at creating some back-end infrastructure. Otherwise, new orders and new deals getting executed will be on the back foot. So to that extent, demand will be a problem. So yes, currency could benefit them, but structurally, from a demand perspective, we expect that earnings of IT companies could be muted in the next 1 year or so. That's why we are not so optimistic on IT as compared to maybe a FMCG or a pharma in the defensive pack.
Interesting. Okay, so that's the view from Rasmik Oza on a number of stocks, on a number of pockets. Now, I want to mark a couple of things. Credit Suisse has come out with a note in which they have identified 39 GARP stocks. GARP is growth at reasonable price across the universe and 3 Indian stocks make it to the list. These are Axis Bank, Godrej Consumer, and Mahindra. This is a global list in which they have identified 3 names which, according to them, fit the bill of growth at reasonable price. Now, I'm tempted to ask Rasmik about Godrej Consumer. And you know, I'm using this as an example, and then I would want a fun technical view out there too. But Rasmik, very quickly, we've seen the Nestle, Britannia, HUL, that variety clock in new highs in trade yesterday. Some of the others are lagging behind quite strongly, the likes of Godrej Consumer, for example. Are you bullish on FMCG? And if you are, would you choose a Godrej Consumer, an Emami, and some of the others which are lower down, or would you stick to HUL, Nestle, Britannia?
I think the first people will still stick with the day-to-day basic necessity products. You know, so within consumer staples also, companies you know, whose products find a higher usage in today's lockdown or in a recession kind of a situation, I think they will still be preferred. Godrej Consumer, though we have a buy recommendation with a, you know, target of 615, I think in the list of stocks in the consumer staples, my preference of Godrej Consumer could be on the lower end, not on the higher end. Why? Because a lot of demand for, or not demand, a lot of revenues of Godrej Consumer come from overseas, especially South Africa. And there probably, you know, we could see certain pockets getting impacted. And certain of its products actually are products which maybe are little discretionary kind of a nature. So probably, maybe, you know, you couldn't, you cannot actually expect that desired continuity of demand for most of its products. So yes, Godrej Consumer looks good along with the pack of FMCG companies, but maybe it will be lower in the pack of our list of companies which we are looking at. For us, right now, maybe from a valuation perspective, still Britannia, Nestle and HUL are still very expensive. So if one wants to, you know, trade, give a trade-off in terms of valuation and growth, then I think we are much more comfortable with names like Colgate and ITC, followed by Marico. So these are the three preferred stocks of ours as of now. Then maybe followed by Nestle's, but still we would be little on the back foot in terms of valuation for these names like Nestle's and Unilever's, because they're still a little expensive, though upside is there in all of the companies.
Okay. So that's the point. I mean, Colgate, ITC are a couple of names, and Marico, I think I heard Rasmik say, which are top of his pecking order. So keep that at the back of your mind, viewers. A follow-up question to Gaurav Bisa. Gaurav, I wanted to take FMCG, but instead I'm going to shift tracks and very quickly talk to you about specialty chemicals. 3 or 4 of these names have bounced back a little bit. Deepak Nitrite, Vinati Organics, Aarti Industries, SRF. Is there any on the charts that looks attractive?
Well, mostly if you talk about these names, SRF is one that has a tendency to move in a much faster way. So, and that still remains a little bit interesting. I would go with SRF among the names that you mentioned. I would give a conditional call if it sustains up a level of 2905, 2910, buy about 2910, keep a stop loss of 2870, and on the upside 3000, 3050 is what I would be looking at. There's a triple bottom formation happening on hourly charts in SRF, and that is looking interesting. Volume participation is also seen over there. So I would not buy the lower levels, buy about the breakout area. Breakout would be around 2905, 2910. That is a trigger point. Buy about that, keep a stop loss of 1%, pay for tax of 4 to 5%.
So that's the view on a couple of the specialty chemical companies. Chandan, very quickly, we're going to get the pre-opening rates. In a strong market yesterday, you had Cummins where a lot of short positions were built in. The stock was down 4.5%. What are the technicals suggesting?
The technical for this stock is quite weak. In fact, we have seen built up of short position in the counter. The stock fell down sharply and open interest added by around 75%. That is significant. I think the huge shorts are being built. So that will continue to keep the stock on the lower side. It is trading at around 8 to 10 years low level. So I think till it remains below 300 zone, the stock has potential to even go down to us 260, 255 levels.
Okay, so that's the view on Cummins, and we're just going to be getting the pre-opening rates. Remember, SGX Nifty is suggesting an opening in the red after a stellar rally that Indian markets witnessed in yesterday's session. There was buying which was seen across the board, but this morning, let's see if the dip that we are about to see in the opening session, according to SGX Nifty futures, that gets bought into or not. But our technical analysts have been suggesting the first support, I think, for Nifty will be coming around the mark of 8,500. We close somewhere close to 8,800. 500 in yesterday's session. And remember, the premium on Nifty futures had gone up. So there you go. You're getting the initial rates on your screen. It's a downtick of about nearly 55 points on Nifty. Remember, the rates will be all over the place right now, and they will be settling down around 908. So Nifty is back into the green. Sensex also trading some above the mark of 30,000 at the moment. In terms of individual stocks, Hero MotoCorp among the Nifty constituents is showing a downtick in the pre-opening session. Hindalco is also showing a downtick of about close to 4%. IT companies from the likes of Infosys, Tech Mahindra, both of them are in the red right now. And a couple of your auto stocks, Maruti, Bajaj Auto, Hero Moto, Tata Motors, all of them are indicating a red tick. But on the positive side, keep an eye on Axis Bank. I think in the pre-opening session, it's showing an uptick of 10%. Remember, even the F&O stocks have a circuit limit of about 15 minutes at 10%. So watch out. GAIL is showing an uptick of 4%. Your heavyweight Reliance, which contributed the most in yesterday's session, almost 100-point contribution coming in from there. That's also showing a positive tick. And of course, we'll definitely keep an eye on all of these pharma companies which were up and about. Sun Pharma is up in the pre-opening session, and your other heavyweights, HUL, ITC, both of them are showing a positive tick. Neeraj, not so bad what SGX Nifty was suggesting, but too early to say anything right now. Reason being, the rates will settle down by 908.
Yeah, Navneet, and which is why while Aurobindo is showing a downtick of 10%, let's give it some time and space to see if indeed it's a 10% downtick or whether it changes. So we'll give these rates a chance to settle down before we talk more. I just want to mark one stock though. Gujarat Alkalis was up about 20% in trade yesterday. They have gotten the permission to restart a couple of their plants, and that plus the market mood yesterday got some of these stocks excited. Maybe that could be excited in the session today as well. So do watch out for that particular stock in the session today. But Aurobindo stands out as the key loser at the Nifty 500. Likes of Laurus Labs, Jyoti Labs, etc. And Cadila looks out as a good one on the pre-open. But let's give these rates a chance to settle. Actually, Rasmik, you spoke about pharma already in detail, but I'm tempted to ask you, what about these companies which are touted to be beneficiaries because of hydrochloroquine or some of the other wanted APIs, the likes of Cadila, for example? What's your thought here for Cadila in particular, or Ipca Labs in particular?
Neeraj, we don't track these companies in the house, both Ipca and Cadila, so I'm a little constrained on giving you nitty-gritties and details about this. But yes, I think whatever we have read in the news, obviously these products could be in great demand, and to that extent, there could be a pop-up in their revenue and profitability, because both of them are the key large manufacturers of these products. So I'm a little constrained. I don't have grip on numbers of these companies. So maybe that's my limitation.
Rasmik, I don't know if it was your team or the institutional team or which of the Kotak teams, but I think yesterday Kotak came out with a buy note on Bajaj Finance, and they mentioned that at the note mention, I believe that a lot of the damage is already in the price. What's your gut view, Rasmik? Should somebody who's got a 3-year horizon buy into a Bajaj Finance right now?
Yeah, Neeraj, definitely. Actually, this is a company, which has been doing extraordinary business in normal circumstances. It's because of this extraordinary times and, something which is beyond the control of anyone, because of this pandemic, business is getting affected. But if you look at this company, if you look at the 10-year horizon, there will be 1-year dip in the company. But anyways, we value NBFCs on the price to book basis, and the book value will still keep on growing irrespective of the 15-20% dip the company will show in earnings. So we are expecting a 14% dip in earnings next year, and then a sharp pullback on maybe around 50-60% jump in earnings in FY22. So for someone who is looking for a 3-year view, I think FY21 could be a washout. We should just exclude looking at FY21 numbers for certain large companies. Look at FY22, and I think so on FY22, maybe the stock should do around 750 rupees book value, and at around 2000, you're getting the stock at sub 3 times price to book. In the heydays, when the business was doing extraordinarily well, the stock should trade at between 6 to 8 times forward price to book. And maybe even if we change the goalpost to anywhere between 3 to 5 times in lieu of the derating which you've seen in the entire BFSI space, I think still probably between 3 to 5, maybe our target price is 2700 on the stock. we value it at a very reasonable and conservative benchmark on a price to book basis. But this stock will definitely come back with a vengeance when things normalize and business activity resumes back to normalcy. So for a long-term investor, these are good levels to just keep on accumulating Bajaj Finance. Though the caveat is maybe NBFCs could see further erosion of maybe 10, 15, 20% in future because business and profitability will definitely get impacted. Cost of funds will be on the rise and OPEX cost to income ratio could be a little on the higher side, and that NPA unsecured loans you will see rise in NPAs. All this is given, I think so. It's known. The price also reflects this because it's taken a big pounding also, from the peak. So for a long-term investor, definitely makes sense to keep on accumulating Bajaj Finance at current price. At every dip, one can just keep on adding the stock.
Okay, that's the fundamental view on Bajaj Finance. And remember, in the conference call on Monday, they have given various scenarios in case if the lockdown extends, what sort of an impact can it have on their business in terms of how much credit cost can go up for this particular NBFC. Bajaj Finance, however, let's see if the stock was the weakest yesterday, but it definitely recovered from the lower levels as the market mood was quite buoyant. Rasmik, I also want your view on autos. We are pretty much sure, of course, this was one space which did not do well in last 1 year because of tepid demand environment. And for normalcy to kick in, even for the economic activity, I think it's going to take some time of almost 5 to 6 months. But purely, Rasmik, based on valuations, would you take a bet on any auto company right now?
No, I think one should avoid automobiles for the time being because our thesis is that we are heading for a little longer global recession, and in this kind of environment, actually, when salaries will be impacted for a lot of unorganized and SME players, So in India, mainly, almost bulk of the employment comes in from unorganized and SME segment, and the slowdown will definitely impact most of the spending pattern of these kind of workers. So I think demand for automobiles will take a long time to come back. Anyways, they were supposed to go through a painful process of the transition from BS4 to BS6. That was a big hurdle, and beyond that now, I think so. I think we will have this renewed impact of demand. So for the next couple of quarters, people the saving patterns actually will be higher, and people will be less on discretionary spending, and automobile is one of the most costliest discretionary spend. Plus I think so. We're talking of delaying of EMIs and so on and so forth. In these kind of environments, I think so people will tend to postpone their requirement and postpone their buying propensity. So I will say, even though the numbers are stocks have been beaten down substantially, you don't know the hit on earnings how much is going to be. So to that extent, your goalposts of valuations could suddenly change. A stock which looks like it's trading at around 12, 13 times, maybe 2 quarters down the line, when numbers get severely impacted, you could see that 12, 13 optically then goes up to 20, 22, 23 times also. So I think we are not very gung-ho, and we're not recommending any automobile stock at this juncture to a client. Maybe this is the time to probably focus on some of the better sectors like telecom, gas, insurance, plus pharmaceuticals, some of the consumer staples. I think these are the sectors which do extensively well in slowdowns and recession kind of environments. I think one should stay with these for at least a couple of quarters and then reevaluate after 2-3 quarters once the economy comes back into its normal stage. Then one can rejig and again go back to these discretionary spending sectors.
Okay, staying away from auto for the time being, but we're just minutes away from the market opening, and we tell you all that you need to know to stay ahead in trade today. A class action suit has been filed against Aurobindo Pharma and Emcure Pharmaceuticals in a US court for concealing facts about a cancer-causing agent in metformin.
Deepak Nitrite receives approval from the Vadodara District Industries Commissariat to commence production of two ethyl hexyl nitrate products.
Embassy Office Parks REIT sponsor Embassy Property Developments has created a pledge of 10.5% in favor of a catalyst trusteeship for a period of about 10 years. The sponsor has almost 15% stake in the REIT.
CCI approves acquisition of 80.1% stake by Hitachi in power grid business of ABB India. It has also approved the acquisition of 100% stake in GMR Kamalaganga Energy by JSW Energy.
VATech Wabag secures 5-year operation and maintenance contract in AMAS sewage treatment plant in Bahrain for 90 crore rupees.
And Phillip Capital says the worst of the lockdown is already behind for Indian Pharma. Upgrades Sun Pharma to a buy from neutral, hikes the target price to 510 from 465, and it has also upgraded Lupin to neutral from sell, cutting its target price to 620 from 630. Okay, do watch out for some of these names. But as I look at the pre-open session, autos are taking the bitter end of the stick. Chandan Taparia, Bajaj Auto, Hero Motocorp, Maruti Suzuki, all three start off lower in trade. What's your sense? How do you trade these ones?
See, comparatively not much comfortable on the auto counter. However, most of the auto counter has seen the strong recovery from the lower levels. So if comparatively I have to pick, then can go with the Maruti. However, the undertone of the counter is negative, and because of the selling pressure, the stock is not finding any follow-up buying. However, on last trading session, it recovered by 1300. So if it manages to hold 4200, 4250, then only I'll attempt for a bounce to us 4600, 4700 levels. But at the same time, if the support is broken, then the stock has potential to go down to us 4039.50. So it's a conditional trade or near to make or break zone.
Okay. Keep in mind that Reliance Industries too is starting off lower in trade today, and Bajaj Finance too is starting off lower. So a couple of these stocks are not looking all that great. Keep them at the back of your mind. We couldn't get a fundamental view on Cadila, but if I can get a technical view or a derivatives view on some of these pharma names, Gaurav Bisa, quickly, Cadila Healthcare and Aurobindo Pharma. Okay, let's make these two stocks. How do they look to you?
Well, Cadila has been one of the slowest performers, though we've seen a strong move in the last couple of days. Overall, it has not been doing too much. I would still wait for a dip because we already seen a strong correction. In case if we see a decent dip in Nifty, this can also see a small correction in it. If it goes towards the level of 295 to 98, one can buy. Keep a stop of 280. It can go towards the level of 325. If that sustains, it can go towards the level of 340 as well. So among the two, I think this is one that is looking interesting. For Oro Pharma, I don't know how the news will impact, but if you look at the charts, it has given a strong breakout, and let us hope that it retraces towards the level of 425, 420. If that level is pressed upon, one can keep a stop loss of 410, and again play for targets of 450.
So it's a view on technical view on a couple of these pharma companies. Chandan Taparia, JSPL had a sharp rebound. I think it was a short covering bounce that was witnessed on the futures and options front as well. What are the technicals suggesting? Has the stock bottomed out? Because we've seen a sharp correction in the recent past for this one.
Yeah, Navneet, talking about the Jindal Steel and other metal counter, the major trend is weak, and we recovered because of the short covering, and most of these stocks gone into the deep oversold territory. But on weekly scale, it has been making lower top, lower bottom. Even after the strong recovery, it has not surpassed the previous week high of 87 zone. So till it doesn't surpass 8700, overall undertone could remain under pressure, and the stock has again potential to go down to us 74 to 70 levels.
Okay, let's try and take in top calls from our experts. Chandan, I'll come back to you first. Your top call for the day today.
Yeah. So first starting, the trade will be buy on Biocon. This stock has given a major consolidation breakout, taking higher top, higher bottom formation on the daily and the weekly scale. Even on the last trading session, we have seen the build up of long position in the counter. So recommending to buy on Biocon with a stop loss of 308 and expecting it to move to us 345 to 350 levels.
Gaurav, what about you? Your top call?
I would go with the ICICI Prudential. It has still to capture its entire move. The kind of breakout it is seeing, there can be a very, very strong upside that can be expected if this turns out to be correct. One can keep a stop of 350, play for targets of 380, and can even go towards the 400.
Okay, Rasmik, we'll let you go on that note. The markets are about to kickstart. We'll let you go on that note. Thanks for your time today. Gaurav, Chandan, just stay on. We'll take in quick opening thoughts from you post-market open, but we're likely to start off, maybe marginally lower, about 1.25% or that. The question is, can we buy? Will we see a buying in that dip, or will this get sold into? Well, we'll get to know in a few minutes from now. Let me just take my rates with me closer so you can see them better. But here's how the markets are starting off. 1.33% lower for the Nifty and the Sensex. The Nifty Bank about 2 percentage points lower. So the start is muted. Banks have given way. But what's leading the chart lower? Well, Bajaj Finance is. Bajaj Finance, Hindalco and JSW Steel are the three top losers as I speak. Reliance Industries now chips in with a 3% loss. This is despite the Morgan Stanley note, which is positive on Reliance today. There is strength and there is weakness in State Bank of India. Weakness in all the other banks, Axis, HDFC, SBI, all of the winners of yesterday are taking a bit of a pullback. But hang on, what if this gets bought into? But Bajaj Finance is the big sore spot, 2163 and counting. What is doing well? HCL Tech sees some buying, serious buying, 466 now. It was 400 2 or 3 days back. On Friday, I think HCL Technologies was near 400. It's 469 currently. GAIL has gained a little bit, 2.5%. Cipla is up about a couple of percentage points. I don't quite see a BPCL in the list of gainers. It's down 2% despite crude moving down and the currency gaining. So there's a bit of a difficult call there. And IndusInd Bank corrects about 4% as well. So the start isn't the most positive. If it's any solace, the Nifty and the Sensex are now less than 1% lower. But the banks have taken it on the chin. Only 2.5% down for the Nifty Bank. So that is the big culprit in the session yet again. How are the broader markets doing?
The advance decline, at least in the opening session, is looking good. It is in favor of the advances, so that's one good news. And the second is volatility has cooled off now for the fourth or fifth straight session. In fact, in the opening trade, I was just checking, it also slipped below the mark of 50, and we're at almost 1 month low for India VIX, which is pretty much a positive sign. Maybe this is indicating the entire fear towards coronavirus. Now the markets have factored in. But in terms of individual stocks, I'm just looking at the Nifty 500 constituents right now. You've got Shipping Corporation, which is up about 14%. And of course, I think pharma will continue to remain the flavor maybe for the next few days as well. Ipca Labs is up 10% in trade. You've got Kadila Healthcare, which has seen gains of about nearly 10%. That seems to be locked in circuit for about 15 minutes. Then you've got stocks like BEML, which is showing some gains. Marksans Pharma is also up. Snowman Logistics. I think all the logistic companies are showing good gains. Snowman is up. All Cargo is up. Gati is also showing good traction in the opening session. Remember, they will be at play considering the supply disruption that we are seeing in this lockdown. So the demand for these companies will go up. KRBL has been locked in upper circuit, and this is not just today. I think in the last few sessions as well, KRBL has been locked in circuit. Now the circuit has been revised to almost 5%. You've got the pathology companies. Thyrocare is up and about by 5.5%. Raymond 2 is showing some bit of uptick. But on the losing side, Future Retail is down 5%. You've got PVR back in red, no respite for this one, down 3.5 to 4%. Future Consumer is down. You've got Delta Corp showing a down. The JSPL, which was up 28 to 29% yesterday, cooled off mildly today. So that's down about 3 to 3.5%. Also, stocks like RBL Bank and InfoEdge are down right now. Let me quickly take a technical check then. Chandan Taparia, your view on market opening. Would you use this dip as a buying opportunity on Nifty or Nifty Bank?
Yeah, I'll use this dip as a buying opportunity because we have seen the positive setup in the data in last trading session, and the volatility index is continuously falling down. We are witnessing buying interest in the good counter from the FMCG or the heavyweights private bank or the other pharma counter. So I think this dip can be utilized. The support of 85.55 for an upside move towards 88.88 to 9,090-200. So.
Okay, we hope there is recovery, Chandan. Have a good day. Thanks a lot for joining us today. Gaurav Vissa, your view on market opening, anything on the indices or any individual stock that you're tracking quite closely in the opening session?
I am yet to see a decent data on stocks, but for Nifty, I think 8650 spot is a very critical level. And there is something like a bearish harmony being formed at levels of 8850. So even if there is a recovery in Nifty, it has to sustain above levels of 8850 on the spot side. Then only we can see the view being negated and it can go higher. If that is not the case, then I think we can go higher and then we can see some more correction coming in. If you look at the Bank Nifty hourly charts as well, around 19,000, there's a downward sloping trend line resistance that comes around those levels, 18,900, 19,000 zone. So that again is going to be a very strong hurdle, and I think if it sees a jump and if it fails to sustain above that particular trend line, we can see second round of follow-through selling happening in the Nifty Bank as well. So I would be a little bit skeptical in the markets today. Let them sustain at high levels, only then you buy, or you let them see some amount of dip. We have seen a 10% move. Let them correct at least towards the level of 8,500, 8,550, and then we can talk about buying it.
Okay, markets definitely taking some breather after yesterday's stellar rally. Gaurav, thank you so much. Have a good day. And Nifty still holding up to that level of 8,700. I think that should be a key thing to be watched out, because in the opening session, we did breach that mark. Barring that, I think VIX is still now above the mark of 51. In the opening session, it did touch lower levels of about 46 to 47. But let's get more views on markets. We're joined by Pramod Gubbi, who joins us right now. Hi, Pramod. Good morning to you. Finally, some respite, I would call it, after seeing a stellar rally yesterday. But Pramod, too early to call in that, even if the economic activity picks up after the lockdown ends, but too early, it's early days, because I think it would be a partial, relaxation that one would see. In light of all of that, do you think all the businesses and the earnings have factored in case if there is an extension of lockdown?
Well, I mean, that's the real hard part. I don't think many people will be able to comment on where stock prices will go or what stock prices factor in terms of the extent of economic impact of this lockdown. Furthermore, we still don't know how long this lockdown lasts. Even if there is a respite, will it be a staggered pull-out from lockdown? How many industries will be able to come back to normalcy, so on and so forth. So I think the only thing that is given is that this uncertainty will prevail for, I guess, perhaps the next 3 to 6 months, perhaps even longer. In that light, I think the only way one can approach investing or the markets is to look at fundamentals and long-term fundamentals. We reckon that if you're investing in companies which have seen a significant resilience to these sort of impacts, and that should form the core of your portfolio, where post-crisis they are likely to emerge out stronger with significant gains in market share, and hence you can really take a longer-term view and say that these will survive these crises, and their valuations are by and large reflecting long-term cash flows as opposed to 1 or 2 quarters earnings. And therefore, given the fall in stock prices, they present a great opportunity to buy these stocks.
Sorry, good morning, Neeraj here. Maybe I missed it entirely, but are you talking about the high-quality financials which have seen a dip, or are you talking about some other businesses?
So in general, I think when we talk about quality, I think it amounts to the resilience of businesses to periods of stress like this. And as we have seen in the last 3, 4, perhaps pretty much every decade in the last 70 years, there has been one event akin to a catastrophic event like this, which takes the markets down. And, time and again, there have been a set of businesses which have come out stronger post these crises. And hence, any investment strategy, any investment philosophy, we believe should be designed in such a way that you build for these situations. So that during the fall, they fall less, you suffer less. But more importantly, when the recovery comes, these businesses are the last men standing, and they take the whole recovery to themselves. They recover faster and sharper.
So, I want to ask the same question to both you and Chakri Lokapriya. Chakri Lokapriya also joins in. But Pramod, I'll first do the follow-up to you as a question and then go to the same thing to Chakri. I'm not asking you guys to comment on an individual name, but the premium name in consumer lending is now getting sold, wherein 2 months ago there was no dearth of buyers. Is this a belief of the market that the model has changed completely, and is that belief misplaced? Pramod, I'll come to you. I'm not really asking you to give us a sense of whether you'll buy a Bajaj Finance, but is the consumer lending business now going to be materially different, and therefore are these price corrections warranted?
Well, no, I don't think we've seen anything to that effect. What we've seen is the price correction. Remember, the price doesn't tell you anything. Price is a reflection of something. Eventually, the price converges to fundamentals, and that to long-term fundamentals. Yes, we have seen a fairly candid, sort of business update from Bajaj Finance, where they've expressed fears of the uncertain and rightfully so, given that most of us have no clue how the underlying economic situation is going to pan out and its ramifications on borrowers and therefore NPAs and balance sheets and so on. I think that their position was much appreciated. But having said that, I think you also need to look at the facts rather than look at trying to guess the unknown. The facts are that perhaps Bajaj Finance has one of the strongest balance sheets amongst the NBFCs, right? The capital adequacy ratio is something like 25%, which means the leverage on the portfolio is somewhere between 4 and 5 times. And thanks to the sort of capital that they raised late last year, whether it's a sheer coincidence or a foresight to raise capital at that point, it is coming in handy at this stage. And secondly, I think their liability side, which is the retail deposit franchise they enjoy, given the reputation of the business house it represents, means that most of its liabilities are fairly granular in nature and hence far more stickier, and the cost of funds is relatively lower than the rest of the industry. And more importantly, the asset liability mismatch. The duration of the liabilities versus the duration of the assets means that the asset liability management is much in favor, which is very, very rare amongst NBFCs. So given these three, there's no point in focusing on the asset side. If you simply look at on the equity and the liability side of the balance sheet, if you would bet on a few NBFCs who would survive this crisis, I think Bajaj Finance should be right up there.
Chakri, good morning. And starting off with the micro and then going on to the macro. But again, like I told Pramod as well, that I'm not asking for a view on that particular stock, but what do you make of how people should approach the consumer lending business on the back of the call that we had from Bajaj Finance? And what's your view out there?
Good morning. If for this to look at the present, it's good to look back at the past, where the consumer lending was the darling of lending. All banks also were, focusing on retail lending. Corporate lending was always was looked upon as a high NPA business, especially in the most recent business cycle. Now, suddenly, in a Corona world and a post-Corona world, clearly for the next couple of quarters, consumer spends are likely to moderate. Yes, it will come back eventually. And second, there is a moratorium on repayments of existing loans. Yes, again, that is short term. But this kind of derails next 2 quarters. Now, can it lead to a certain amount of NPAs going up in the shorter term? Probably yes, for select players. So will valuations hold up like they did in the past, as in the kind of a premium multiple that you gave to some companies? I don't think so. The multiples are likely to come down. And second, if you look at in this country, more 40% of the economy is a parallel economy. They're largely self-employed, and they also go out and borrow and buy various things. Now that sector has been hit, or rather the parallel economy will be hit probably far more than the organized employees. And so, which means at least for the next 2 or 3 quarters, lending is going to come down. But so against this backdrop, I think the multiples will come down. Yes, they are strong businesses, but the demand side of the equation will slow down, as well as GNPAs will marginally go up.
Okay, it remains to be seen whether financials will continue to be the darling of the street. Remember, last 10 years, we've seen a good contribution coming in from there, be it Bajaj Finance or the HDFC twins. And it is the unsecured lending retail part of the business which has spooked concerns even in the market. But Chakri, I want to talk about a pocket which has been doing well. And even in today's session, I think pharma continues to, see increase in prices today as well. So Cadila, Cipla, Biocon, across the board, we are seeing buying coming into the pharma companies. Considering it's a pocket which has not done well in the last 3 or 4 years, do you think it's just the beginning and this rally will last? The pricing pressures we were seeing for these companies may ease going ahead?
Yes, I think pharma as a sector will do well, not just for this year, but also for the next couple of years. in terms of, because there is a certain amount of re-rating that is happening. It kind of coincided with the fact that, you had an FTA-related issues facing the sector in the past couple of years. Some of it for individual companies is kind of drawing to a close. Second, individual companies, you take Dr. Reddy's with diversified basket of products, strong US demand, earnings visibility fairly strong, and valuations are looking good. IPCA, on the other hand, domestic, largely focused business, again, valuations looking good, and with a strong, decent pipeline. So you expand that, where Cadila valuations are very attractive. You look at Glenmark, yes, it is a slightly more volatile stock in terms of running its business, but its valuations are very attractive. So a number of names in the pharmaceutical industry are now beginning to look attractive, and the earnings outlook which is a price commodity in current uncertain times, is looking fairly robust.
Okay, Pramod, the other defensive pocket, that's the FMCG space, where we've seen certain stocks hitting their life highs as well, from the likes of HUL, Nestle. They weathered the storm. Of course, it could be on account of good demand seen for their products in uncertain times like these. What would your advice be? Should one look to book profits at these higher levels, or stay put with the position that they have in this pack? Pramod, that question was for you. For the FMCG space, there are a few stocks which have been doing pretty well, HUL, Nestle.
Sure.
Would you advise people to stick to these stocks in their portfolio, or would you advise booking out and probably buy something where valuations are now looking attractive?
Well, I mean, look, there are three aspects to it. I think one aspect which has triggered this sort of a rally or flight to capital is the fact that is the demand aspect, right? I think the same applies from FMCG to pharma as well. The fact that these companies are in the business of making products which are essential to the daily life of human beings is being brought to the fore, and hence the sort of flight to safety to these sectors. But one other aspect which is equally important, if not more important when it comes to investing, is the competitive position of the said company in the respective industry. Just a strong demand is not enough, because a strong demand will drive significant new entry into those sectors. Of course, certain sectors will have high entry barriers in the form of branding and distribution and so on. That provides an advantage to the incumbents. But having said that, unless and until you have a strong, dominant competitive position, it is not a given that the investment will end up on the right side. And the third aspect is valuation. Valuation, I think, is being fairly, I would say, misused through PE multiples and so on. Our reckoning is some of these businesses have lasted for decades on end, and most likely to last for the several future decades as well. If you take long-term cash flows into account to value a company, I don't think multiples today truly reflect that. So I won't really book out profits on the back of valuations only. If you reckon that a company has gone up despite a relatively weak competitive position in its industry, then perhaps it's time to take profits out. But you have to juxtapose a competitive advantage along with strong demand to build your investment case, and not just get carried away by the demand that the industry is seeing today.
Fair enough. And of course, the demand continues to remain strong for a lot of the products that these companies manufacture. Pramod, the other question is for the life insurance companies. Now, last year, per se, all these stocks did pretty well. The sector is, of course, underpenetrated, but there were a lot of quarters in the market which also started to argue that the valuations have touched, sky-high levels. Do you think they're at comfortable levels? Would you look at this space closely?
Well, again, I think I'll go back to the same aspects of it. I don't think there's a question of demand for life insurance in a country like India with the sort of demographics that we have. The growth runway is pretty long. The second question is in terms of competitive dynamics. Life insurance in general, if you look at the global industry, doesn't lend itself to moating or building competitive advantages. It's fairly commoditized to that extent. However, in India, given the nascent nature of the industry, given the nascent nature of the sort of product portfolio of several companies, there is scope for one or two companies to actually run ahead of the rest of the pack by innovating on product launches and so on. So given that, I think there are a couple of companies which are doing better than the rest, and given the long-term growth demand, I don't think valuations are adequately factoring in. There is still a strong investment case to look to buying some of the life insurance companies, particularly the market leaders.
Okay, we leave it at that, Pramod. Thanks much for taking the time out and being with us today and giving us your thoughts. Chakri, that's the question, right? Non-lending financials. Would you reckon that that's the pocket that the market would focus in when they look at financials in India? Because lending financials might have these asset quality issues come up over the course of the next 9 months.
Yes, they will have these asset quality issues. But in terms of, if you look at even insurance companies, yes, well-established fact that demand will remain fairly robust, etc. But the question is, as a portfolio, how much does one invest in? These are new sectors, small sectors. They will see a certain amount of what you call, at some point, valuations will catch up with them. So yes, they're good sectors to invest in, but not clearly to go overboard on.
Chakri, when I look at the nature of the stocks which have bounced back big time in the last 1,000-point rally on the indices, some of those internet-based businesses like IRCTC and a couple of others stand out. The specialty chemical space really stands out. I mean, Deepak Nitrite today is at 460. It's almost as if the whole correction in the markets didn't happen. Aarti Industries is back to 850. So it's not just the biggest name like SRF. Some of the mid-sized names too are bouncing back very, very strongly. And each of these is a leader in the product that it manufactures in the world. Do you reckon that this is a pocket that people should either stay invested in or even make fresh investments into?
Yeah, this is a pocket which clearly is on a growth curve. They have seen fairly strong demand over the last couple of years, and that is set to accelerate in the coming next 3 to 5 years. Simply because now you will see a certain amount of diversification away from China, and these companies at the margin would benefit as a result. And all the companies that you've named, whether it is SRF, the market leader, they're very diversified businesses within the company. And so, some pockets of the business, of their businesses, will keep firing on irrespective of the economy at large. So, and while the end products are fairly essential in nature, so they are not, so the demand for essentials will remain robust, and the valuations, one of the reasons these companies do not usually carry much higher multiples is because they're relatively lower margin businesses. But as they gain in scale and volume, as they grow over time, I think there is a sufficient case to be made that investing here would also yield strong returns over time.
Okay. Chakri, the other question is telecom, and it'll get restricted to one stock, but so be it, because Reliance is a conglomerate of sorts. I wonder if Bharti Airtel fits the bill right now of businesses which will escape this COVID-19 issue relatively unscathed, because the business typically does not get impacted by virtue of lockdowns or lower spends. These are annual spends which keep on happening.
Yes, this business does not get impacted as much because what goes down, and yes, a certain amount of what you call prepaid customers, their rechargings have come down simply because shopping outlets have remained shut, and also businesses have shut, so which means that amount of commercial demand has come down, but that is made up by the fact that you and I are chatting online today. So net, it doesn't make much of a difference to the overall business, but in terms of their debt profiles, and given the nature of the business, there is the stock that, yes, ARPUs will go up and therefore one should invest. But why are ARPUs going up? They're going up because to catch up from a loss-making situation to at least try and break even over the following years. So I would not invest in such companies where the debt profile, or rather the profitability of the future profitability of the business does not really look that rosy.
Okay, I just want to shift focus to markets. By the way, we're in green. Nifty's recovered all its losses that we've seen in the opening session. So far, I think the dip got bought into. That's good news. We're above the mark of 8,800 right now. Nifty Bank, remember, in the opening session was down about 2 to 2.5%. That too has recovered. It's still in the red, but we've recovered from the lower levels. It's now down about 1%. Market breadth is looking pretty good. And your rally for HUL continues today as well. The stock's up about 6%. Even the other FMCG companies, Britannia is up and about. Also contributing to the gains today are probably pharma stocks. Once again, Sun Pharma has seen gains of about 5%. But your top gainer right now in Nifty is GAIL, which is up about 7 to 7.5%. Chakri, the other theme probably that the market has been discussing, and these are unprecedented times to look at oil prices where they are right now. It somewhat creates a macro tailwind for a country like India, which exports its oil requirement. But keeping all these factors in mind, maybe at a certain point going ahead, it will create that macro tailwind. Would you then take a bet on any oil sensitives?
Oil sensitives, you said, as in crude related?
Yes.
Yes, clearly, yes. You look at a number of companies, even companies like Bata and Relaxo, these are footwear companies, but their raw materials are crude linked. And with, crude prices and crude related products, raw materials coming down fairly sharply, these profit margins of these companies will significantly expand, even if they do not assuming they do not cut prices significantly, which I doubt they will. And now you expand it to multiple sectors. They name all the chemical companies that we talked about. Then all the paint companies. Now, yes, demand for the next couple of quarters is likely to be sharply down in India, but again, so are the costs which will come down. Then you look at a whole bunch of petrochemical companies, downstream petrochemical companies, like polyester yarn companies. All these companies across board will benefit in whether the crude is at the current prices or even if they're at about the $40 range, $40 to $60 range. That's a wide range, but in the current environment, I think as demand comes back, these will be the first beneficiaries.
All right, Chakri, we leave it on that note. Appreciate you joining us today and taking us through your thoughts on markets, which have recovered quite substantially, I would call it, from the lower levels. Nifty is now up 50 points in trade. And of course, I think the broader markets, they seem to be outperforming. Mid-cap, small-cap indices have registered better gains than the frontline indices, and your market breadth also looking positive. Let's see how the day progresses, whether these gains are sustained or probably we can build on from here. Just to give you a range in terms of options data, I think next level to be watched out on the upside would be the 9,000 mark. On that note, we'll wrap it up here on this edition of Indian Open. Thank you for watching, and thank you from the entire team who's put this show together.
The union to secure your future is here. Andhra Bank and Corporation Bank are now Union Bank of India.
देखो देखो